The end of the year can be a critical time for affluent families. It's a time where a lot of financial planning strategies are utilized before the year ends to help position themselves for better financial strength moving forward into the next year. That's what we're going to talk about today. Hey everyone, this is Thiago with thefedcorner.com, where we're helping federal employees and their families make better financial decisions. So today we're going to talk about year-end strategies and things you can do to put yourself in a better financial position. Throughout the course of the year, we've talked about a lot of these strategies, all right? But this video, we're really gonna boil them all together. Now, we also wrote an article that pairs with this video, and we're gonna put the link in the description, and it's really important that you go to this article and you actually read through it for a couple of reasons. The first is that we wanted to keep this video straight and to the point, so the article goes into a little bit more detail for each one of these strategies. The second is that we actually included additional resources and more links within that article for some of the strategies so that, again, you can further develop your knowledge base. Okay, here we go. First one, TSP and IRA contributions. If you're under 50, for 2021, you can do $19,500 into your TSP. For over 50, you can do $26,000. Take a look to see how much you've contributed so far this year and determine whether you're still on track to maximize your TSP. It's a wonderful savings vehicle. Utilize it to its potential. If you're maybe not going to be on track for the maximum contribution, you can change your contributions between now and the end of the year to ramp up a little bit so that you can help reach the maximum a little bit better if you're able to do that. As it relates to IRAs, you may be eligible for making an IRA contribution even above and beyond what you put in the TSP. This will help you further save towards your future, either on a tax-deferred or a tax-free basis. Just make sure you're checking the deductibility of your IRA contribution, okay? If you have a work retirement plan, TSP, and you're making an IRA contribution, depending on your income, you may actually no longer be eligible for deducting it, but that doesn't mean that you can't put the money in non-deductible and then move it backdoor into a Roth, which leads us to the next point. Backdoor Roth contributions. This is when you move non-deductible IRA contributions into a Roth. And so because it's not going directly into the Roth, that's why it's called a backdoor. This is a great way to be able to save additional tax-free money, okay? But there's a variety of different rules and regulations around it, so make sure you do your research. The next one is review your health insurance. Guys, open season is coming up really soon at the time of when we're doing this video. And so this is going to be something that's on everyone's mind. If you have not gotten our annual FEHB guide that we put out, there's an article that goes with it describing all the different types of health insurance. We include a cheat sheet guide. It's like an infographic. It's been super popular. We've gotten inundated with people requesting this thing. And so if you've not gotten it, go to our website, thefedcorner.com, and somewhere in there, there's FEHB stuff. I don't know where it is. It's somewhere in there. You'll find it. And just make sure that you request it, and we'll send it out to you. It's been super helpful to folks. The next important one is tax loss harvesting. Now, the ultra wealthy are professional at this, right? Their advisors and their accountants are doing this probably throughout the course of the whole year. For most people, this is something you can do at the end of the year. The idea is that if you have dollars that are not inside a retirement account, so this could be an individual account, a joint account, a trust, any combination of those, right? When you're rebalancing and readjusting your portfolio, if you sell specific positions that are not doing as brilliantly as some of the other ones, you're generating a tax loss for yourself. And if you also generate winning investments at the same time, you can wash away some of those gains and keep yourself from having to pay capital gains. And speaking of washing away gains, yet another rule and regulation to make sure that you're aware about, the wash sale rule. Okay, many of these strategies you'll see, there's a lot of code and laws and regulations that apply to each one of these. You have to make sure you do the right thing, or again, mistakes can be costly. The next one is charitable donations. The end of the year is a really great time for you to be thinking about your philanthropic desires, how it is that you want to help maybe a charity or your community. because you're starting to get a pretty good sense of what your income is going to be for the year. And so you can start to plan your giving to kind of match what your income is going to be for the year. This is something where you want to loop in your accountant as well. They're going to have great insight for you. Now, you also want to consider donating stock instead of cash. Well, what do I mean by that? Instead of writing a check or having money sent or wired to a charity, you can donate a stock position, let's call it Apple, that has been appreciated. Many organizations and charities will also accept a stock donation instead of cash. Why would you do that? Well, if you have to generate $10,000 by selling a stock position inside a taxable account, right? You're also going to pay capital gains on the $10,000 that you need to generate to then pay for the charity. If you just donate $10,000 of that stock to the charity, well, that stock no longer becomes your tax liability, and now it goes directly to the charity, so they receive that $10,000 in stock, and they can sell it and not have to worry about it either. So you get to make that charitable donation. You also get a benefit for yourself. RMDs and QCDs, required minimum distributions. Most people know that one. Less people know the other one, qualified charitable distributions. Let's talk about these. So we'll start with RMDs. In case you didn't know, RMDs are back. Last year, the IRS said there's a waiver on RMDs. No one had to take an RMD for 2020. 2021, however, they're back. And of course, I have to mention RMDs are for anyone who's 72 and up. So if you're not 72, you don't have to worry about it. It applies to inherited accounts too. Now, the lesser known one is the qualified charitable distribution. This is when qualified charities, you have to do the research, make sure they accept this, but they will allow you to send money directly from your retirement account straight to the charity. You effectively never took possession of the dollars that left your retirement account, which means those dollars don't count towards your ordinary income like a normal RMD would, and it goes to a charity. So if you're philanthropic, you can make a donation that way. But guess what? You also satisfy your RMD in doing that. Okay? So that's an interesting strategy. But again, you have to be of RMD age to do that. The next one is beneficiary confirmations. Guys, this is a good practice to do at the end of the year for every single year. Take some time, think about what happened in your family. Do you have new grandbabies that are running around that perhaps you wish to incorporate into your legacy? Okay, maybe you need to check the beneficiaries on your TSP, on your IRAs, on your life insurance. You can check the registrations of your accounts. How are your bank accounts labeled? Are they payable on death or transfer on death? All of these things will help in the event that you pass, sooner than you may have expected, or even perhaps when you expected. And the last thing today is just being aware of upcoming tax law changes. There was a bill this thick that was proposed, and in looking through it and doing the research, we put out a summary for that. So again, links in the article, like I mentioned, go check that out. There's a lot of changes that could be potentially complicating for a lot of families, and so you want to make sure you're staying ahead of that. Your financial planner should have already talked to you about this. This should not be a surprise to you. Your accountant as well, okay? Make sure if they haven't, bring those up. These are important topics that you need to put at the front of your mindset, because some of them could be coming into play very, very soon, and you've got a very limited window to take advantage of some older laws before the new ones kick in. So guys, make the end of 2021 a year of action. This is not a guilt trip, but all of us have said we were going to do something. We've kind of pushed it off. It's been a crazy couple of years. This summer was the first that we felt a little bit liberated to live our normal lives again in a variety of different ways. And but now that winter is coming around, let's take the time and let's sit down and make sure that we get these things. These are important things to strengthen your financial position. There's some tax laws coming in. There's a lot of different things that you need to do before the end of the year comes around, and let's make sure we get to them. After all, it's not just your money, it's your future. Guys, so that's it. Like I mentioned earlier, there's an article that's linked in the description. Please check that out. There's more information on each one of these strategies. We go a little deeper, and for a variety of them, we also include additional links for more resources for you to learn more and dive deeper into a lot of these strategies. And if you like today's video, please thumbs up the video. It really helps the YouTube algorithm, putting our video in front of other people who are looking for this quality type of information. And make sure you subscribe to the channel. We'll put our website down there too. You can subscribe to our newsletter. There's stuff that goes out to them that doesn't go out to the rest of the world. So you're missing out if you're not on there. Make sure that you're on that list too. And until next time, happy planning.